Chad Moyer with you. It is time for another Cattle Call. Cattle Call is an original production of the Nebraska Rural Radio Association, and it's brought to you by Wolf Auto, small town strong. Once again, joining me here today, Brad Kooima of Varilek in Sioux Center, Iowa. We have a few things to talk about this week, and again, interesting times that we live in. Before we talk about the what we saw, especially on Tuesday, and a big down day in the futures, just quickly again, kind of recap. Last week's trade held fairly steady. It was a good end to the week, wasn't it, last week, Brad?
No, not bad at all, Chad. Thanks for having me on. One thing that did happen last week, we saw that convergence between north and south. You and I talked about it for a couple of weeks or more, feeling like the extreme tight supply in Texas was going to finally, impact that a little bit. And what I mean by that is, we've had 10 months of record low placements in Texas because of the border being closed. So this if you hear this giant sucking sound coming from down there, it's because we're exporting cattle from Kansas to Texas, exporting cattle from Nebraska to Kansas, Iowa, etc. It shouldn't be totally unexpected, I guess, that our prices have leveled out. I've been surprised that it's taken this long, frankly. Of course, I always lobby pretty hard for the fact that the North's quality of their cattle are much better than the cattle in the South, and that we usually get more than them because we actually negotiate and we just don't turn them in on some formula deal. So usually, though, a characteristic of a bull market is that the North is higher than the South. So that is one of those little flashing yellow, be careful signs, I think. One of the things that happened that's less fundamental and more nuanced to how futures work is what we've seen here this week is we've seen as this fund roll has begun, we've seen largely a fund that has said, you know what, thanks for the fun. I'm taking my profit. I'm not rolling them back. We've lost about 25, almost 30,000 open interest this week, liquidating the October and seeing a lot of it not getting replaced in the back months. So it makes one wonder if the funds feel like maybe they're at least done here for now. And I think that's created some of the weakness, Chad, in the futures, where Tuesday was a bloody day. $9.25, which is way too big a move anyway. But that was an ugly day.
Yeah, and let's talk about that next in the fact that, like you say, it did happen, right? We had major moves on Tuesday, but I think the takeaway message maybe is we did not utilize those expanded limits on Wednesday. So maybe there is a little bit of moderation still, a little bit of clearer heads prevail going on in the futures right now, huh?
Right. And today, too, if anybody's watched today, we opened sharply lower and just like that spun around and we're, $1 plus higher on the fats and even a little bit more than that on the feeder cattle. No, I think yesterday was a critical day, to need to stop the bleeding. Don't create a big panic deal like you might have had before. We had expanded limits, $13, something like that in the feeder cattle. Thank goodness we didn't have to deal with something like that. We are seeing some softness in the cash feeder trade now for the first time, as one would expect, when the futures start to soften. So that's all in play here. I'm not sure. I know you didn't ask me this question, but if I had to just kind of speculate here, I wonder if we don't get just a little steady, weakish, wobbly, clean up some cattle here in the North. It's not the time of year where typically you go gangbusters higher. I could see a little bit of a sloppy trade here for a few weeks, in my opinion. And then a market that still is going to be supported by very, very tight supplies, especially in the South. So.
Yeah. I was going to ask you that. What do you think of the situation is right now? Because we went for so long saying that we're pulling, the thought was we were pulling cattle forward and things like that. Well, then all of a sudden we're talking about huge weights and things like that. I don't think the volume slacked off so much that it feels like it should change that quick. Is there something else, a different dynamic going on? What do you think?
It's a great question, and it's a question that we ponder here as fundamentalists. You and I have talked about, the question, are we killing the available supply, right? Is this light slaughter truly all we have? One of the barometers of that, of course, would be you'd say, well, what's the average weights doing? Well, the average weights are going up. So you would say, well, maybe not. Now, seasonally, the weights always go up this time of year. The weather is perfect. right? At least in my neck of the woods, cattle are doing it all. 60 degrees at night, low humidity, and not very hot during the day. So, and the crop of cattle that you're selling here in the north are these long-fed calves, we get it all. But, the fact that the slaughter was so light, and, you had a packer that was consciously not killing Fridays and stuff, for a long time. So, yeah, I'm a little worried that we went from being pulled way forward at least in our neck of the woods, what I call the north, Nebraska, Iowa, to maybe not quite so much anymore. And one of the influences behind that probably was the cost of feeder cattle, Chad. The comment was made several times here to us that, well, I don't know, these feeder cattle are way too high. I'm going to buy something that breaks even at 250, or the cheapest inventory that I have is the stuff that I already have in my yard. So that we need to keep an eye on that. It wouldn't be the first time this time of year where we got just a little plugged with that. That's why I thought maybe we were going to be a little wobbly here for a little while, with cleaning up some cattle that guys are like, holy cow, 237 still pretty good. I think I better try to, get on down the road and sell some cattle that way. So, but you got to balance that with the extreme tight supply that they got in Texas. So I don't think it's like, jump off a bridge type of analytics here, but we're at a very high price too.
Mm-hmm. All right. Let's get to our listener question. We had one that was submitted that we're going to talk about here today. And this one has to do with after the feed yard and even after the packer. It has to do with, how do retailers source their beef? Is it a direct contact? Is it maybe something that they go through? How often do they do that? And you and I were talking before we went on the air here, the fact that, even after the meat is cut, it's still kind of a long path to when it's finally bought by the consumer, right?
100% correct. I was going to give a very smart aleck short answer and say, yes, all of that stuff, it happens. So the beef procurement's done in a multitude of ways. Okay. And let me just give you a little perspective on the and then this is maybe a little bit on maybe it's a little better than this, but I just grabbed yesterday's data. Okay. The number of box beefs that we got reported, what the box beef value supposedly was. 136 loads. We've done 136 loads. If it's a 50,000 pound load, do the math. Okay. 118,000 cattle. Yesterday we killed average carcass of 915. Do the math. We got to find out what about 6% of what was killed yesterday is worth, if you looked at it that way. The little bit that we get reported on it, but the cash, that the cash box beef trade is moving is even worse than the number of cash cattle that trade, right? So we're only getting a glimpse, which answers somewhat of this person's question of, yes, there are end users. There's like an Applebee's type situation where they probably buy it 3 months out. I'm told that the cruise ship industry buys a whole year at a time. And if you think about it, they probably have to do their pricing structure so they can sell those vacations. So it's all over the place. I think there's plenty of stuff that moves in a shorter term basis. If you want to talk about the big box stores or the traditional grocery stores, maybe are only 2, 3, 4 weeks out. But the more you think about it, you can understand how complicated that market really is. If the beef starts to not move very well, that end user is going to say, hey, I don't need any beef this week. We'll just wait till next week. Or if it's flying off the shelves, the other is true. So my answer is beef is procured in a number of ways, and it takes a while to, from feedlot to where it's actually available, probably a minimum of 3 weeks. And in some cases, much longer than that, because people want to lock in their prices too, if you would, for what they're buying as well.
Sure. Thanks for the answer on that, Brad. If you have a question for Brad, put it in the comments below. Make sure you hit that subscribe button as well. It'll let you know when another cattle call comes out. As we wrap up today's program, Brad, as we record this, it is the 24th anniversary of the 9/11 attacks here on American soil. And, we talk about these big black swan events that can just throw a market into a tizzy. Think back 24 years ago as you were in the markets, Brad, the impact that had, and even, how things like that, black swans have all sorts of definitions, but what did that mean back then? What sort of a lasting effect has that had till now?
it's good to remember and reflect on that. Yeah, I remember it very clearly. Cattle futures were open, and we had it on. We had it on one of the news stations here on the TV in the office because it was like, hey, did you hear this? And that whole first thing, was it a small plane? Was it an accident? I remember we watched the second plane hit, and then trade was suspended. They stopped all trade on all the markets, not just cattle, all of the markets. And of course, your emotions are raw, wondering what's going on, but just just looking at it from a market perspective, which that's a small thing compared to what went on there, but that's what you and I are doing with. So I remember thinking at the time that when uncertainty is going to be bearish, that's just the way it always is on cattle. And not even knowing how to completely get my head around what that was going to be. So we were suspended with trade until the third day it reopened. And I thought this was going to be bearish. And I remember when it did finally open the 3 days, we very briefly were just a little bit higher and then just collapsed and went down the limit and down the limit and down the limit and down the limit. So initially the reaction there was not right. And I mean, with that briefly higher opening, because what happened there, Chad, was that if you remember, we just clammed up. We just crawled into our own little world. The idea that we were going to go out for dinner and have a steak, not a chance. Wondering exactly whether there was going to be another attack. I mean, we just froze up. We, the consumer, as an end user of whatever, and then it took us a long time to recover from that. And in some ways, I'm not sure that necessarily the whole country's recovered totally from that whole thing. But that was the reaction of a complete fear of anything and everything, and that really turned down the consumer demand for stuff like what we're talking about here this morning.
And if you remember back, could you point to a time where you would say that the livestock market or the cattle market was back to norm after that? How long did it take before we were back to trading fundamentals again?
Over a year, probably closer to 2. Because every time there was some weird little something going on, you were afraid that, oh no, here we go again, so I would say closer to 2 years probably. And I don't know if we've ever really totally, whether it's that black swan event or whether it's a Holcomb fire or whether it's a COVID pandemic or whatever, it seems like anymore we trade with that. And I've done it on your show, that caveat of, I'm really bullish unless, something we don't know about, right? I mean, so every night you go home with that notion, and I've said that 100 times, that, with the cattle market, there's always a risk you can go home and something happens that's going to make the market down the limit. Very seldom is there a risk that it's going to have something happen that makes it go up the limit, right? It's just the nature of our markets.
Yeah. All right. For folks that like to reach out and visit with you, how can they do that, Brad?
KKBtrading.com, but even better, call us 712-722-0023.
Brad, it's good to have you on. I appreciate the conversation today. Again, that's Brad Kooima and Varilek at Sioux Center, Iowa. On this week's Cattle Call, again, put your questions in the comments below and hit that subscribe button, and we'll see you next week on another Cattle Call. It's brought to you by Wolf Auto, Small Town Strong.